guys, it's Stock Curry, and in today's video we're going to talk about the jobs report that just came out. We're going to be talking about why all the high growth stocks were down today, and I'm going to be telling you what you should be doing right now. Whether you should be holding, buying, or selling. What do you do? Let's get into it! Now first of all, I just wanted to thank Tip Ranks for sending me this t-shirt. It says, "Cut the bull, trust the data." Well, don't worry, I'm not going to be cutting out the bull, because then I'd be showing off my hot dad bod, and nobody wants to see that! Okay, let's get into our market news. Now, the first thing we need to talk about today was the U.S. jobless claims report. The U.S. jobless claims, that is the new number of jobless claims, was expected to come in at 350,000 this week. In reality, it came in at 419,000. That was much higher than expected, and most importantly, it was higher than the 368,000 from last week. And so initially, that sent the entire stock market down. All the indices went down, but then later in the day, the indices rebounded, and we actually had a green day on the indices. Now, the 10-year Treasury was up again today. This is putting pressure on high growth stocks. And that's because as interest rates rise, it makes it more expensive for high growth stocks to borrow money and, well, grow. And as a result, our high growth stocks were down quite a bit today. So what should we be doing right now? Should we be selling everything and putting our money into cash? Should we be holding and just waiting for it to go back up? Maybe we should be using money to buy the dips? Like, what do we do? Well, I'm going to tell you that the market environment today is very different than it was back in March when we last had a correction in high growth stocks. Back in March, high growth stocks were highly overvalued. They needed to correct, and that's why we saw them come down. This time around, high growth stocks are already beat down. Most of our high growth stocks have been trending very close to the 300-day EMA for months now. The fact is, there's just not that much room for these to go down much further. Instead, this time around, it's the large cap stocks that are overbought and due for a correction. And so if anything goes down, it's going to be the large cap stocks. And so what I'm doing with especially my high growth stocks, I'm just holding and I'm waiting. Now, I do have some cash on hand, and so if we do get some dips further, maybe they drop below the 300-day EMAs, they become even more oversold than they are right now, then I'm going to be using my cash to buy some dips. But I'm going to tell you right now, you're just going to have to be patient, because there's no telling how long it will take for money to flow back into high growth stocks. Okay, let's get into our stock picks. So I'm going to let you know right now, I didn't find any new stocks for you guys today. The fact is, a lot of stocks are still overbought. They're high values. There's just not a lot of value stocks out there that would make good long-term holds. So I'm not going to be able to find one for you guys every day. So today we're going to recap the top YouTubers that we follow on this channel. In case you didn't know, in case you're new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every day I watch hours and hours of YouTube videos, and then I consolidate the top stock picks from the top YouTubers into a single video, and then I give you both the cliff notes on the stock picks as well as my analysis on the stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, click the bell icon, click all so that you get all the notifications when I release new videos. If you're following on Facebook, go ahead and follow the page. In fact, I'll give you 5 seconds to do that right now. Alright, before we get to today's stock picks, I just want to remind everyone that I'm not a financial advisor, and none of the YouTubers that analyze are financial advisors either. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any assets. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it's also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $2,300. Alright, now regarding what's going to happen tomorrow in the markets, all I can say is the futures are green right now, but the Asian markets are red. I'm not 100% certain that the futures are going to remain green by the time the market opens, but we'll have to see. I have a feeling tomorrow's going to be a small red day, but who knows. Alright, let's get into our stock picks. First up is BTC. This is Bitcoin. Keen and Grace let us know that Elon Musk said that Tesla would start accepting Bitcoin again soon. You might remember how a few months ago, Elon Musk said Tesla would stop accepting Bitcoin until less fossil fuels were used in the mining of Bitcoin. There was speculation that after China shut down Bitcoin mining, that Elon Musk might start accepting Bitcoin again for the purchase of Teslas, since most of the fossil fuels used to mine Bitcoins were happening in China. And sure enough, it now looks like that might start happening. BTC rose on that news and is now back above the 10-day EMA as well as the critical $32,000 support level. The real test for Bitcoin will now be if BTC can rise above the 21-day EMA. BTC only rose above the 21-day EMA for a brief period back in June, but other than that has stayed below the 21-day EMA every day since early May. To say that BTC is at a critical level right now would be an understatement. Next week could make or break the price of Bitcoin for the next few months. If BTC continues its decline and the 21-day EMA drops below 32,000, BTC could be doomed and will most likely fall down to the $24,500 level. But if BTC can start rising next week, and especially if BTC closes above the 50-day EMA at $35,000, then that could be the start of a new bull run for Bitcoin. Next up is AMC. This is AMC Movie Theaters. Keen and Grace discussed why so much volume has been happening in the dark pools. He showed how Citadel processes about 47% of all retail trades. They process these trades on something called Citadel Connect. Citadel Connect runs the trades through the dark pool so that Citadel can profit off of the bid-ask spreads. And Virtue Financial has a similar process called VEQ Link. VEQ Link processes about 25% of all retail trades. Combined, that means 72% of all retail trades are processed through the dark pools just from these two companies alone. Dark pool trades are reported, but they do not affect the share price because they are not processed on the open market. So by processing 72% of retail orders on the dark pool, Citadel and Virtue are able to artificially keep the price of AMC down. That's true because 72% of the buying pressure on AMC is processed without affecting the price of AMC. Right now, this is all legal. In normal circumstances, these dark pool trades are actually helpful because it allows market makers to do what they are legally required to do, which is to ensure market order trades are processed regardless of whether or not there are enough buyers and sellers in the markets to take all of the trades. But in extreme circumstances, like we have here with AMC, they can be used to manipulate the share price. And given the huge amount of AMC trades that are being processed on the dark pools right now, it does look like Citadel and Virtue are using their dark pool order systems to artificially keep the share price of AMC down. Now, the SEC is getting involved. They are working right now to write new, long overdue rules to regulate and require registration of these dark pool trades. There are some rules that have been in place since 2008 financial crisis, but those rules and regulations have proven ineffective in the current market environment where large market makers are using dark pools to manipulate the share price of stocks with a lot of retail interest. Next up is AMD. This is Advanced Micro Devices, better known as AMD. Tom Nash compared AMD to Intel, ticker symbol INTC, today to figure out which company would be the better company to invest in long term. Tom Nash gave a number of reasons why INTC is actually a better value right now. For one, the forward PE ratio on AMD is 41.97, while the forward PE ratio on INTC is 12.10. Tom Nash also looked at price to sales and a number of other factors. In every case, AMD is about 3 times more expensive than INTC. So comparing apples to apples, looking at value, INTC is 3 times cheaper than AMD, which makes INTC a better value than AMD. AMD does blow INTC out of the water when it comes to growth though. AMD had a year-over-year revenue growth of 45% last year, while INTC only had a year-over-year revenue growth of 8% last year. And when it comes to earnings, it's even worse. AMD had a year-over-year increase in net income of 657% last year, while INTC had a year-over-year decrease in net income of negative 0.71%. On the flip side, INTC has a dividend with a dividend yield currently at 2.48%. AMD does not pay out a dividend. And in the future, the growth of these two companies might flip. INTC spends 7 times as much as AMD on R&D, so they might be able to develop a product that is superior to AMD and eventually exceed AMD's growth at some point in the future. Now, Tom Nash covered a lot more in his video, so if you're interested in more analysis between these two companies, I recommend you go watch Tom Nash's video that he uploaded Thursday. Next up is CCIV. This is a SPAC and they're merging with Lucid Motors. Lucid Motors is an American EV manufacturer. The vote to merge CCIV with Lucid Motors was pushed back to Friday because not enough people voted. If you received an email asking you to vote on CCIV, please open that email and go vote now. The merger will not go through if not enough people vote. That said, it's hard to say what's going to happen to the stock price after the merger, but most SPACs have been selling off post-merger. Most SPACs run right at their $10 redemption value going into the merger and then sell off as soon as the redemption value goes away. But CCIV is different. CCIV has been trading at double its redemption value and currently is still 10% above the nominal value of $20. So I don't think we'll see the same sell-off with CCIV that we see with other SPACs, but it's hard to say. Larry Jones actually thinks CCIV will drop back down into the teens post-merger. Right now though, CCIV is just following along with the rest of high-growth stocks. StockMo thinks CCIV will get to between $30 and $40 by the end of this year and $60 by the end of next year. Larry Jones did warn that one of the items that was up for vote was to increase the number of authorized shares from 500 million to 15 billion. That would give CCIV 30 times more shares than they currently have. Now those won't all hit the market at once. Authorized shares just mean that a company can do share offerings in the future if they want to. Authorized shares also give the company the ability to give shares to employees as part of their overall compensation packages. But because those shares can be used for share offerings, that could put downward pressure on the stock in the future. And it's almost certain that Lucid will need to do share offerings in order to fund their aggressive growth targets. Next up is CHPT. This is ChargePoint. They are the largest charging station company in North America with 73% of the total market share. They are also starting to expand globally. The stock was down quite a bit today, but the MACD histogram is still trending upward, so I remain both short-term and long-term bullish on CHPT. StockMo also likes CHPT as a long-term hold. Next up is FSR. This is Fisker. They're a car company getting into EVs. StockMo reiterated that he likes FSR for a long-term hold. FSR was only down a little bit today, and the MACD histogram remains bullish. Next up is NIO. This is NIO. They're a Chinese EV manufacturer. NIO looks identical to a lot of other EV stocks right now. The stock was down a little bit today, but the MACD remains bullish. You can't expect stocks to just go up every day. You're going to have to get some down days in the mix. So don't panic or worry day to day. Just focus on the long term if you're invested in NIO or any other EV stock for that matter. StockMo is still bullish on NIO long term, and so am I. Next up is PATH. This is UiPath. They're an AI company that automates the repetitive tasks that employees do, saving companies time and money. ZipTrader said this is a long-term high-conviction play for him. PATH is also a high-conviction play for Cathie Woods, as ARK Invest purchased PATH in 6 out of their 8 funds. The only 2 funds ARK Invest did not purchase PATH in was their PRNT fund, which is exclusive to 3D printers, and their IZRL fund, which is exclusive to Israeli companies. PATH saw 64% year-over-year revenue growth last quarter and 81% year-over-year revenue growth the quarter before that. They are not entirely profitable yet, but they did have profitable quarters 2 out of their last 4 quarters. This is a high-growth stock, so like all high-growth stocks, PATH might struggle if interest rates rise. Technically, the stock has been bearish ever since late May. I would personally wait for PATH to bottom out before buying in. I think a sign that PATH has bottomed out will be 2 candles in a row closing above the 21-day EMA. The 21-day EMA is currently at $65.12. And last we have TSLA. This is Tesla. They're an American EV manufacturer. TSLA has dropped a little bit in the last 2 days, but remains on track with the long-term trend line. The MACD also remains bullish, and StockMo and I remain both short-term and long-term bullish on TSLA. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $2,300. And if you're not a US resident, or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading. Trades start at just $1 Canadian, 4 euros, or 6 Australian dollars, depending upon where in the world you live. And I do have material connections with both Interactive Brokers and Webull. So when you sign up for either one of those using my links in the description below, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now finally, don't forget to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.